During the quarter, the Merchant West SCI Global Managed Growth Fund returned 5.6%, underperforming its peer group average. The fund's underperformance was largely because of a lower exposure to the world's largest technology companies, particularly in the United States. The fund's standout performers in the first quarter were AbbVie, which was up 22.5% in rands, Wells Fargo, which was up 22.4%, GSK, which was up 21.6%, and ExxonMobil, which was up 21.2%. During the quarter, there was a major shift in expectations regarding when global interest rates would start falling. The annual inflation rate in the US unexpectedly edged up to 3.2% in February this year, compared to 3.1% in January, and ahead of forecasts for another 3.1% print. Higher inflation, a strong US labor market, and hawkish commentary from central bank officials means the first Fed rate cut in 2024 is now only likely in the third quarter, if they cut it all this year. The US economy continues to expand at a healthy rate, growing by 3.4% annualized in the fourth quarter of last year versus market expectations of 3.2%. The healthy state of the US economy, together with ongoing enthusiasm around the benefits of artificial intelligence, led to another excellent quarter for US equity markets. The S&P 500 is up more than 9% year to date, following its strongest first quarter performance since 2019. Higher than expected inflation data in the US led to a reversal in the downward trend in bond yields, with the US 10-year Treasury yields moving back above the 4% level to 4.19% from 3.8% at the end of last year. Higher bond yields also had a negative impact on global listed property, with the GPR 250 REIT index declining by 2.2% in US dollars over the quarter. Macroeconomic data elsewhere in the world also continues to show encouraging signs, further supporting the prospects of a soft economic landing, despite the restrictive monetary policy employed by central banks around the world to combat high inflation. Emerging equity markets also improved over the March quarter as Chinese stocks continued to recover from their recent lows, benefiting from the key supportive interventions announced by the government in February. The MSCI World Index gained a stellar 8.9% in US dollars over the quarter, with the MSCI World Growth Index up 10.2%, outperforming the MSCI World Value Index, which was up 7.5%. The MSCI Emerging Markets Index gained a more muted 2.4% in US dollars over the March quarter. The fund's current allocation to growth assets was maintained at 85%, but remains in line with the fund's longer-term strategic allocation of 90%, being 65% in equities and 25% in listed property. The high allocation to growth assets reflects the view that future returns from cash and bonds will still be low. The fund's current allocation to equities emphasizes quality over any other factor, and with global growth slowing and inflation remaining stubbornly high, quality is likely to outperform other styles, at least in the short to medium term. Based on a combination of Bloomberg, Refinitiv, Iris, and Merchant West investment forecasts, the current one-year forward income yield on the fund is 3.8%, which again compares very favorably with the yield on global money market and income funds, despite having an almost 90% allocation to growth assets. Based on those same forecasts, the income produced by the portfolio is expected to grow at approximately 3.9% per annum over the next 3 years, slightly above global inflation expectations over that same period.